Funding for Market Journal is provided by the Nebraska Corn Board.
This is Jane. She thinks she's just filling her car, but she's also filling the air with cancer-causing toxic chemicals used to boost octane in gas. What doesn't burn in the engine enters the air and your lungs, even your heart and brain. Bad for everyone, especially kids. Ethanol is a natural octane booster, clean burning and non-toxic. More ethanol means less scary stuff in our gas and in the air we breathe. And that makes your choice pretty plain, Jane. American Ethanol, cleaner air for Nebraska.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Lee Schulz describes profit margins for hog producers. Brad Lubben discusses property tax reform in Nebraska. Bob Nielsen talks about precision ag tools, and Mike Boehm gives an update on UNL's Institute of Ag and Natural Resources. Iowa State Extension livestock economist Lee Schulz is our hog market analyst this week. 2016 was a good year for U.S. pork exports. It was the second best on record behind 2012. About 21% of American pork production was exported in 2016. Mexico was the top buyer, accounting for nearly 31% of the total. An incredible close to the year helped. Shipments there in November and December were Mexico's highest 2 months on record, with data back to January 1989. We talked with Lee Wednesday morning and began by asking why Mexico has been such a strong player for U.S. pork shipments.
Well, I think you look at Mexico, this has been a very positive development. If you look at the first 5 of the 7 months, they were lower. So they did really gain a lot of momentum as we got into the latter part of the year. Really driving that has been the demand for hams. If you look at a specific product mix, some of that has been due to, I think, a little bit of back off from the imports of hams from China, from the U.S. mix, so that similar product mix has helped that flow a little bit, but also I think really pointing to the strong demand from Mexico. We know that there are conversations about them growing their domestic herd, so I think given their supply situation, that has really benefited our exports to Mexico.
If you look at the overall scenario for U.S. pork exports, where do you think the ceiling is?
I think the ceiling, I think that is yet to be really defined, and I think we will highly debate that over the coming years as, we've initially kind of seen the headwind from the exchange rate and the strength of the U.S. dollar. Now, the talks of, free trade agreements and potentially renegotiating some of those agreements, I think that has given us maybe a bit of cautious optimism. But if you look really long run, I think, some of the forecasts I've seen are for growth of upwards of maybe 15% in the next 5 years and maybe upwards of 25% from a volume basis in the next 10 years. Now, a lot of that's driven by our increased supply. I think our calculated growth here in the U.S. situation. But I think also we really need to look at the percent of our production that is exported, really key on growing our market share on those export markets.
If you look at 2017, how do you think overall pork production will compare to 2016?
When we look at production, I think given the pipelines, the supplies on the ground that are in the pipeline, we're looking at larger supplies. I think for slaughter numbers, we're looking in that 2 to 3% growth. I think that could be a little bit conservative. It could be upwards of maybe 4 to 5% when we look at production, especially when we look at weights. Weights, I think, have really leveled off here late into 2016 and early into 2017 with the larger supplies. I think that could help move those hogs through the system and maybe back off those weights or at least keep those weights below what we've seen the last several years. but also maybe driving those as, we've continued to see from a trend line as really 1 to 2% growth in weight. So I think we're really looking at larger supplies in 2017. A bit to be debated about how large those supplies, but I think we can really count on 2 to 3% growth here in 2017.
Analyze for me how prices have recently moved.
The start to 2017 has been great, especially when we compare that to prices in late 2016. If you look at the week ending February 10th, prices top 71.28 from a lean hog basis here in Iowa, southern Minnesota. Really, that is the highest price since the third week of July 2016, and a 75% increase from the low that we hit in mid-November at 40.75. Futures prices have all gained really across the board when we look at 2017 contracts. So that has really given us a lot of optimism for better returns in 2017.
Indicative of what might be the future, what are isoine prices doing right now?
Well, it amazes me every year. We do see it that really the price increases we've seen from October up to January, really when we see the heights of those prices from a seasonal standpoint in January. We've seen them as low as $12.72 in the first week of October, and now we're up in that $54 range. They are really at the heights I think we're going to see for the year, because these current prices are really targeting that late summer month. As we get into the next several months, those are the hogs that are going to be priced off that October and December contract, and I think that will pressure down those iso-wean prices.
Let's close out with a look at margins for farrow-to-finish producers here.
Well, I'm looking at margins being about $10 better than we've seen in 2016. We've seen 2016 margins for farrow-to-finish production right around that break even, maybe about $1 loss. Here in 2017, I'm looking at that $9 to $10 range. The first quarter, about $12 per head profit. The second quarter, about $18. Third quarter, $15. And the fourth quarter, I think, returned to negative in that $5 to $6 loss range.
Next week, Doug Simon from Trade-offs in Lincoln, Nebraska will join us to look at corn and soybean markets. The Nebraska Unicameral is considering legislation this session to address property tax relief for ag land. On average, Nebraska producers pay more real estate and personal property taxes than any of the other states measured by the U.S. Department of Agriculture. In 2015, that amount was nearly $25,000 per farm, nearly $11,000 more than the next closest state, California, and much higher than the $9,500 per farm in neighboring Iowa. Taxes as a share of production expenditures in Nebraska at 5.3% was also the highest in the nation. The Nebraska legislature did act last year, adding $20 million per year to the state's property tax credit program for ag land, but supporters of reform are hoping for more. On Wednesday, we talked with Nebraska Extension policy specialist Brad Lubben about the effort this session.
Well, clearly we have a big discussion on property taxes, and from the agricultural community's perspective, certainly a focus on the amount of and the increased burden that the ag sector has paid in terms of property taxes across the state. One of the fundamental discussions right now in the legislature is about changing the assessment formula or the assessment method for farmland from the current market-based approach, consistent with other classes of property, to an income-based approach that might provide a little more predictability, maybe more stability, and a little bit more relief in terms of ag's share of the property tax burden.
Go further on how legislation would address that issue.
Yeah. Well, fundamentally, let's remember, if we move to an income-based approach, we fundamentally have some income value, revenues minus costs, either calculated for the crop production, livestock production system directly, or calculated as some sort of landlord's share of those, divided by some capitalization rate, interest rate, mortgage interest rate, gives you market value, or at least calculated market value from this income approach. There are a couple bills in the legislature right now proposed. Both would use some sort of long-run average to calculate revenues and costs to calculate a net return to land. In one bill, the capitalization rate would be set at 6%, which might be consistent, or at least in the neighborhood of where mortgage interest rates currently are at for farmland, but where that moves over time might be a question. The other bill, however, actually says let's use effectively a market-determined capitalization rate. If we have an estimate of net income to the land and we have an estimated market value, then the capitalization rate effectively is what the market seems to be willing to pay for land that has this earning capacity. However, if you use that market-determined capitalization rate, then fundamentally we're not really changing to an income approach, we're changing to maybe a more stable estimate of what the market really must be willing to pay.
When you say stable, that brings to mind some of the issues that agricultural producers have had when it comes to income versus the property taxes that they're paying. Now these, or at least some of this, would be addressed in these legislative bills.
We would expect under this income-based approach, I think, with both bills proposing some longer run average, that you won't have as many swings like we see with farm income. Rapid rally, sharp decline. You won't have the land value itself sort of smooths that out a bit, but this longer run average calculation would certainly smooth out that a bit. You wouldn't see quite the peaks and valleys that we could see today based on a wildly moving market.
In the rural areas of the state, there's obviously a discussion that will need to be had if there is reform in this area about how tax funding is set in future years.
Well, yeah, fundamentally, let's remember, even if the income approach provides relief to producers, and it certainly might provide more stability or predictability and uniformity across classes of land, but even if it provides that, it doesn't guarantee substantial property tax relief, particularly in a very rural district where farmland is the core of the assessed value. Even if assessments pull down, or even if the approach pulls down assessed values, as long as tax collections are over on the other side of the equation, it just affects the levy rate more than it affects total tax bill. So there's more to this whole property tax question than just the assessment approach, but this might be an interesting and valuable discussion to start.
You can find more data about farm production expenditures and taxes through a link on the Market Journal website. The February Nebraska farmer says in 2015, sorghum acres increased more than 22% across the country, largely driven by demand from China. In Nebraska, acres harvested for grain increased from 160,000 in 2014 to 240,000 in 2015. That area may not be as high now, but this month's magazine says there's still interest among farmers in the state to raise sorghum. You can read about how producers are tapping sorghum's potential as a high-yielding crop in the February Nebraska Farmer. As we told you earlier this year, a USDA study released in October showed U.S. growers were adopting precision ag technologies. Half of all corn farms used yield monitors in 2010, about a third utilized auto steer systems, and more than a fifth used variable rate technology. All produced positive but small returns. At Nebraska Extension's recent crop management conference in Kearney, we talked with Purdue Extension corn specialist Bob Nielsen about his research using precision tools and began by asking which practices were useful for farmers.
In a sort of a broad category, I think one of the best tools we have out there are some of the spatial data sets like yield monitor data and aerial imagery, maybe drone imagery. Simply because those kind of data sets do a very good job of illustrating the variable patterns in the field for yield or for plant growth. You know, it's all about, well, and I may differ on people on this, but to a large degree I think it's all about managing the spatial variability to try and even things out at the same time that you're trying to ratchet the yield itself ever upward. But if you think about you know, the impact these spatial areas have on the bottom line, and you're putting the same inputs on a field, and yet some areas yield 20, 30, 40 bushel less, you know, your contribution margins are really through the floor in those areas where they're maybe just fine in others. So it's really about managing the spatial variability.
You had talked today about using soil sampling. Tell me about soil sampling randomly versus soil sampling in targeted areas.
From a spatial perspective, and I should probably make sure that when I say, I'm not saying special, I'm saying spatial, S-P-A-T-I-A-L. In terms of spatial variability, soil sampling, when we're, let's say we're doing a 2.5 acre grid soil pattern, which is somewhat common, at least back in Indiana. If you think about it, we're not collecting a whole lot of data points per acre with that kind of a system. It's less than half a data point per acre. But that's the data that we feed into the computer GIS software, which then takes that data and tries to interpolate the whole variable pattern through the field. And so when you provide that computer program with very few data points of information, it simply is a struggle to try and describe the true spatial patterns of variability in the field. So soil sampling is challenging in that perspective, that ideally we want to be sampling, maybe at 1 acre increments or even half-acre increments to get enough data to describe an accurate map. But now you're juggling dollars again, right? Because anybody thinks about a half-acre soil sample and they start thinking dollars. Oh my gosh, that's a lot of money. I would argue, admittedly without being able to prove economically, but I would argue that I think the value of an accurate baseline soil map, soil nutrient map, is maybe worth the extra dollars up front to accumulate a more intensive soil data set. Because when we use these programs and they draw these nice colored maps based on a limited amount of data, if those color maps are not accurate from a spatial perspective, then the agronomic decisions we make may not be accurate either. So somehow or other we have to simply collect more soil test data on a per acre basis than we do now to simply make more accurate spatial maps that we use to spread the fertilizer.
I'll ask you a very broad question. What's your opinion on using variable rate technology?
Variable rate technology certainly has its place if you have the data to support its use. And by that I mean, when a lot of us think about spatial data, we think about soil maps and that spatial variability. We may think about elevation changes in the field. We may, if we're running, say, a tool that estimates the electrical conductivity, we may have those kinds of maps. So we have a lot of different ways to come up with these different zones. And if we have the yield response data for those zones that tells us indeed there's a different optimum seeding rate, for example, well then certainly there's merit to variable rate seeding. But that is the challenge, is aggregating or assembling that much yield response data within these individual zones. And frankly, I would argue that not a lot of people have that kind of data. We've looked at this pretty hard in Indiana. We've had 90 population trials in recent years. We've had over 200 nitrogen trials around the state. And frankly, for us in Indiana, with the variability that we deal with, honestly, we do not see a consistent benefit to variable rate seeding or variable rate nitrogen. And it's the data telling us that. And that's really what's necessary for anyone, is if they have the data that says, yes, indeed, that responds differently, you bet, then variable rate is a tool. If not, I guess if not, it's simply neutral.
The USDA would agree with that. The returns that they're seeing are something like 1% back. Okay. So it's very small, but certainly the technology seems like it's something that could have promise in the future, no?
Well, true, but it's sort of logical, right? And unfortunately, logic can be a systematic way of going wrong with confidence. So we always have to be careful when we think it sounds right, if we don't have the supporting agronomic data to back it up. And that's really what it's all about. And that's why people like me and others, my colleagues around the country, this is the kind of thing that we're doing, is trying to generate the data to support some of these newer technologies. And the precision ag technologies are probably similar to any other new technologies we have, that sometimes they come out without the knowledge or the data to justify whether or not they're needed. And so we sort of try to catch up, which we sort of always feel bad that we're in this process of catching up to the technologies. But until the technologies become commercialized, we simply don't have the opportunity to try and validate them, because almost everything we do, in Indiana at least, with me and a couple colleagues, is field scale on-farm research. So until the farmers have access to the technologies, it's a little hard for us to actually do the trials to generate the data to determine whether it's valuable or not.
Next week, Andrew Kniss from the University of Wyoming will discuss the increasing challenge of weed resistance in crop production. There are 93 counties in Nebraska, and Mike Boehm is hoping to visit every single one this year. Mike is the recently hired Harlan Vice Chancellor of the Institute of Agriculture and Natural Resources, or IANR, here at the University of Nebraska-Lincoln. He also serves as Vice President of Agriculture and Natural Resources for the University of Nebraska system. Mike came from The Ohio State University and started at the beginning of 2017. He joined us earlier this week to discuss his vision for IANR, the state's current budget situation, and his experiences so far traveling around Nebraska. it's great. I mean, it's really about the people and the place, and then the partnerships that exist, and then the possibilities that exist out of that. So from day one, the people are just amazingly warm, and Nebraska nice is real. Our trips around the state, I came out in December, and the IANR team took me out to West Central. We made it to Goodmanson. We made it down to Curtis. That was terrific. I've got a story there we can talk about, meeting a young mom in a small, I think Hyannis maybe is the name of the town, and just really got to meet somebody that was maybe not part of the university, but understood the university. So that affection for the university and the place and the importance that it plays in Nebraskans' life is one common theme that we've heard a lot about.
You aim to visit all 93 counties within the short term.
We're at 41.
That's impressive.
41 and counting. So yeah, I'm looking forward to still some additional trips here between now and fair season. So I'm starting to load up my county fairs, and of course the state fair. Have those dates locked in later in August, September. So looking forward to that.
So within the first few months here, what's your vision for the Institute as it relates to agriculture?
Yeah, so my vision isn't the most important thing here. I'm going to be quite candid. The university and the institute had a really firm foundation when Ronnie Green was here, and with Ron Yoder as the associate director, associate vice chancellor. But the department heads that we have, the center leaders that we have, and then the 130 new tenure track faculty that we've hired. It really is their vision, and so we're in a good spot. We have 6 focus areas that the Institute focuses on, and I think where we're at right now, and the budget situation being what it is, for a new person hitting town, what it's really allowing me to do is listen, get out, talk to faculty, staff, students, stakeholders, and then ask the question, where have we been, where are we now, and where are we headed?
How might that budget situation that Nebraska has right now impact what happens here?
So I knew coming into Nebraska that as agriculture goes, so too does the state of Nebraska. And I'd say, agriculture and writ large agriculture and the dynamic tension that exists with natural resources, but also the vitality of our communities and the citizens of Nebraska. It's all rolled together. So the budget situation, I think it's a complicated dance that takes place every 2 years. Ohio also had a biennial budget, same kind of a schedule. Some of the things I've learned in the last 20 years is that oftentimes where you start looks very different than where you end up. I think it's important that we pay attention, that we have data-informed conversations. There are big issues that the states wrestle with when it comes to allocation of funds for prisons, allocations of funds for health care, and then you work your way down into preschool through 12th grade, public education, and then higher education. So here in Nebraska, no question, from the governor to the unicameral, the senators to the president bounds to the chancellors, everyone is trying to figure out what the right mix is moving forward. Candidly speaking, depending on the severity of the cuts, it has the potential to impact what we deliver as far as our teaching, our learning mission, our research, discovery, innovation mission, and how we extend that information through extension to the citizens of Nebraska. But I'm optimistic. I'm an optimistically wired person, so I think we have a long way to go between now and the end of April, and then between April and June before we have the final budget.
Now with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, here we again for the weekly forecast. The news of the week has been essentially warmer than normal temperatures, in fact record temperatures on several occasions during this last week. We've been consistently in the 50+ range, with many of the days basically breaching the 60 and 70 degree mark depending on location, a little bit cooler to the north. But overall, a very warm, dry week. Helped to dry out some of the surface wetness that we've seen in eastern Nebraska. And it looks like we got a few more days of this ahead of us before we start to turn our attention to a more active pattern starting to develop as we go through next week. And by the time we get to the end of next week, it looks like a major trough will push into the Central Plains, bringing a combination of rain and snow to our region. So as we go to the maps, what we will see is we have this big upper air trough to our southwest, bringing the onshore flow to the state of California, and this is going to generate some surface lows coming into the western United States. You can see the series of them in the western United States that will bring a pretty significant onshore flow of moisture into the western United States, really hitting the San Diego area, and this will gradually start to make its way toward the east as the week progresses. So that first piece of energy starts to move in toward western Texas to the south of us, and we see it low in the upper plains. So we're going to be caught between these two systems, and as these generate, we'll start to see the precipitation sliding through the Rocky Mountains, and it's going to split as we go into Monday. And as we get into Monday, we'll start to see another trough approaching in. A little wave moves across the north of us. That will generate the chance for thunderstorm activity, and then we have the low to the south of us. So we're going to be caught between them, a brief chance of precipitation on Monday and Tuesday morning, but the main activity will slide to our south with that upper air low, and that will push into the Gulf Coast regions as yet another storm comes online over the western United States. This is the one we're going to watch because it's going to start to generate lows across the front range of the Rocky Mountains, particularly as we get into late Tuesday, Wednesday, and then this will organize into a pretty good precipitation event. So you see the precipitation moving into the western United States on Tuesday. By Wednesday, this low really gets wound up. Surface low will develop in eastern Colorado, and as we start to see that surface low generate, it's going to start to push out into the plains. So we're going to see the moisture surging into the central Rockies, and then as we get into Wednesday night, Thursday, we're going to start to see this trough pushing out. And as we see this trough coming out very deep, lots of moisture going to be streaming to the north, so we'll see a good organized convection system, and here's this low really wound up, a lot of wind with it, and the cold air to the north. Perfect combination for a snowstorm in the central United States. Here's the first of these precipitation breaking out over the central Rockies, spreading snow into South Dakota, and then this low basically starts to lift toward the northeast, and that brings a lot of moisture, upslope flow across western Nebraska, tightly wound low pressure system. Tremendous volume of precipitation expected to break out into the central United States. Snow in the western half of Nebraska, thunderstorms in the eastern half, maybe up to 2 inches in isolated locations. And then the system will pull through the entire state as we go into Saturday, so eastern Nebraska is likely to get accumulating snow. Now as we go to the 8 to 14 day forecast, it does show this cold air coming in. It's probably underdone. It needs to be pushed out a little bit farther east, but the warm conditions will move off to our east. And below normal temperature, or below normal precipitation in the Pacific Northwest, above normal in our region, and that will bring much colder air in as we get into the last week of February.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on pork exports, property tax reform, precision ag tools, and UNL's IANR. As always, you can keep up with Market Journal during the week by following us on Twitter, Instagram, and Facebook. Next week, Doug Simon will analyze corn and soybean markets, and DTN's Bryce Anderson will give a weather outlook for spring. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska Lincoln's Institute of Agriculture and Natural Resources.